Joining me is James Demmert. He is Chief Investment Officer at Main Street Research. So let's just get into this conversation. You expect the S&P 500 to hit almost 6,200 by the end of the year. What's driving this rally, and are there any risks investors should watch out for?
Yeah, between now and the end of the year, that's our target, and that's really based on most recent information that we've had, right? Inflation numbers are not too cold. The economy at 2.8% growth, not too hot. That's a perfect setup for stocks, and you still have money on the sidelines, much of which got sold before the election in fear of that, piling in to look good by the end of the year. So we think that Santa Claus rally has got some turbochargers on it and could get us up that high by the end of the year. The risks to that is that maybe the Fed doesn't cut next week. I don't think that's a high risk. I think they will. I do think, however, there's risks in 2025, particularly in the first quarter, that will relate to the Fed, which we can chat about.
Now, there's somewhat of a sentiment that under-invested investors are feeling a little FOMO right now. So what's your advice for those hesitant to invest at these sort of levels?
I talk to some of them once in a while as they interview our firm, and there's quite a few investors who've just really not understood the AI tailwinds and all the opportunities, so they've missed out. And our suggestion to those investors, which is in my last book about market psychology, is to be patient. This market has really not had a correction of any significance since the summer. It will have one. That's how markets work. We think there's a correction due, probably a very startling one, in the first quarter of 2025. And that's going to be an excellent window for investors who have that FOMO, if they can wait that long, to push into that correction, because we think 2025 is going to be an excellent year for equities, but definitely have more volatility. And our target for 2025 is 70.50 on the S&P. So if you can buy that dip, you're going to look great. But I would suggest highly that you be patient before we get there.
James, I want to lean into this conversation a little bit more. You predict about a 10 to 15% correction in early 2025, especially in AI-related stocks. So how can investors prepare for this?
Well, I think, first of all, prepare emotionally. Investors have gotten so excited, so euphoric, and they sort of lose track that normal corrections are usually around 8 to 12%. We think this one might be a little bit more volatile because a lot of people made a lot of money. So first of all, prepare yourself emotionally that can happen, but also look at the macro and say to yourself, okay, if there is a correction, the market still goes to new highs by the end of 2025. So emotionally prepare yourself. At our firm, we're more tactical, so into the beginning of the year, we will be pruning back some of our biggest winners, NVIDIAs and the semiconductors, to sort of level the portfolio out a bit and provide some cash for opportunities into that dip. We think 2025 is going to be a different market, not necessarily the center stage be the semis. We think it's going to be second derivative tech and some other sectors, which I can talk about.
And AI is also another hot topic, especially here on Wall Street. And, it is driving earnings and valuations in the years ahead. So which sectors will benefit most, do you think?
Well, think about it this way. I think investors should think, the picks and shovels, the semiconductors really win the war in the beginning of these big bull markets. But what happens next is, the economy has greater productivity growth, right, which is great for all companies, but specifically those that embraced AI, that were early adapters, what I call second derivative, the companies that really, the hyperscalers and the companies that bought AI. So that's where you really want to go to the sectors like telecommunications and technology that aren't the semis, but maybe the software and the networking companies. But also, don't be afraid to go to healthcare, where there's been tremendous investments in AI. Don't be afraid to go to some of our other favorite sectors, which is financials. Jamie Dimon investing tremendously in AI. Plus, they've got, of course, moderated interest rates. Industrial companies, really successful there. And I love the utility sector because we've got to build that out. We don't have enough electricity to serve all this AI and EV. So we need a bigger grid. Lots of companies can benefit from that.
Now, I do want to ask you about what investors can anticipate come 2025. How can they manage the volatility that you expect in the early first quarter and take advantage of potential buying opportunities, especially with the new administration?
Yeah, I love that question because this is going to be a different year, 2025 than 2024. Stocks are not going to be driven by the Fed or all that cash on the sidelines. It's going to be like earnings and the economy. So investors, if you're not fully invested, you want to wait for that pullback. If you are fully invested here, prune back some of your big winners because the leadership in 2025 is going to be different than in 2024. So some of those semiconductors will still do well, but there's opportunities in other places. So I would suggest pare back some of your big gains. Maybe if you want to wait for the tax year to change, do it in the first week of January, and then set yourself up ready for any pullback in the first quarter we expect to go into these other areas which I just mentioned and these other sectors.
James Demmert, Chief Investment Officer at Main Street Research. It's a pleasure.